Good morning, everyone. Welcome back to the Prospero.ai stock market live streams. Sorry if my voice sounds a little hoarse today. I'm a little bit under the weather. There seems to be a sickness going around. I wonder if any of our viewers have caught it, but so many people I know are sick nowadays. But we'll push through today as the markets have opened up green. It's looking like a bullish day across the all markets with the QQQ leading the way up 1.67%, followed by the S&P 1.15%, then the Russell, and then the Dow. But we are green across the board. We will get into what the QQQ and the SPY net options sentiment are telling us in the Prospero app. We have been positioned pretty neutral with a leaningness towards the bullish direction. So good move to see this morning. Hey Grumble, welcome to the stream. Is that an emote? What did you comment? An emoji? That looks pretty cool. Cool. What's up? After we talk about the QQQ and the SPY and what we're seeing in the markets today, I want to get into the story about SpaceX launching their first satellites that will provide cell phone service. So you probably know that a lot of people were using their internet, but now they are also providing cell phone service, which is going to provide messaging and calling. And how is this going to affect companies like AT&T, Verizon, T-Mobile? Are they going to be up to the challenge of competing with a Musk-backed company and the amount of innovation and technological advances that we expect to come from SpaceX and Starlink? I see Mario is in the stream. Happy New Year, all, and a great day to be in the street. Yes, stocks are looking good today. I hope everybody's portfolio is looking green. If you're a reader of our newsletter or follow us on Twitter, we posted about this morning, but the Prospero portfolios are up to a crazy hot start. Obviously, they're not going to keep up the pace that we are at right now, but it is still good to be up this much. I'm trying to look for the exact number right now that we're beating the benchmark by 1,484% to start the year on an annualized basis. So obviously that's going to come down, but still good to get off to a hot start, and a win rate of 69%. So it's been a good start to 2025 for the Prospero. Signals after the story about Starlink, we have a couple stories about the electric vehicle industry and autonomous driving. So Lucid is a company that was hyped up by a lot of people when it was a SPAC and when it first went public. One of those momentum heavy names, but it struggled. The stock has not been able to have any kind of bullish uptrend for several years now. But I think I want to bring it up today because I saw a story about how they increased deliveries by 71% in 2024 and increased production. Have we finally gotten to a point where the company's underlying business has caught up with the stock market cap and the hype that was initially there? Hey, George, welcome to the stream.
Morning.
Then we're going to talk about a rumor that was going around across social media, and a few even news companies picked it up about how Amazon might look to acquire Lyft in the coming year as they look to make their play at the autonomous vehicle rollout expected to happen over the coming years that Tesla looks like they're in the leading position for, but looks like Amazon might make a play. Will it be a good idea for them to make this move on Lyft or not? We'll get into all of those details. And then the king of Wall Street, Warren Buffett himself, beat the indexes for the ninth straight year in a row last year. So we're going to bring it up, talk about how he did it, give kudos to the king of Wall Street, and maybe 5 years from now, Prospero will be in the same position that Buffett is today. But he just seems to do it year after year, so super impressive. A story broke this morning in the entertainment and streaming world. There's going to be a shakeup and a partnership between Disney, Hulu live streaming and live TV, and Fubo. And it seems like the way Fubo stock reacted, that they will be a big winner from this. But also we'll take it from the perspective of Disney. Now Venue, their partnership with Fox and Warner Bros. Looks like it's going to be allowed to go through. So big shakeup in the streaming world. We'll cover all of those companies. And then last but not least, you guys are going to have to stick around till the end. We're going to bring up maybe a forgotten sector in the market that seems like investors haven't been interested in investing in recently, but can it recover, and how is the outlook for it over the next coming months and years? But I think where we should start off today is the green and bullishness that we are seeing across the board, George. The QQQ is fastly approaching being up 2% on the day alone. So we're seeing a big bounce in the markets. What do you make of the move we're seeing today? And how are you positioned? I think I saw you were leaning bullish cautiously with maybe, I think, one more bull pick than bear to start the week. And does this green we're seeing on this Monday look like we're going to be up for a bullish week in the coming week?
Yeah, I mean, we kind of had a bit of a bull lean. Now I'm thinking as I looked at QQQ and SPY net option sentiment, that it might be good to add another bull pick because we had 6 and 5, but it's been pretty volatile. We might see how the day looks if it continues to, maybe by the end of this we'll add one more bull, maybe subtract a bear. But yeah, I mean, I think it's kind of another good lesson in how helpful net option sentiment could be, right? Because we saw the QQQ net option sentiment especially stabilize towards the end of last week and give like a nice lead on the market. And we had shorts, and our shorts have gotten off in accuracy to another really good start. I think we're let's see. I think we are let's see how many we got here. 12. We're 9 for 12 to start the year, right? So that just shows like if it buys into our strategy, even though we were loading up on a little more shorts and the market's been a little more bullish than people have expected, we've picked the right ones. And, that's kind of our bread and butter. We risk manage that way. So if the markets were, a little less performed less well, we would be in good position too. But yeah, obviously just a great setup. And another great start to the year for us. That's always exciting, but we really always owe it to QQQ, SPY, and an option sentiment. If you haven't made it part of your process yet, and you're watching this, I'm not sure what you're doing. And if you have any questions on how to get it in there, but let this be the year, it helps you.
So I think last year was a rare year in that there wasn't a full 10% pullback in any of the major indexes, and usually there's at least one in most years. Do you expect that this year, even though I believe we're generally bullish, we'll have more volatility and may provide for that type of a downward move to happen at some point throughout this year?
I mean, we have to see where, we keep talking like we have to see where the Trump administration legislation comes in. But, one of the reasons that we're bullish this year is we expect an administration that supports the stock market, right? So I think that, that's a very fair expectation. And, I think part of the reason we're seeing volatility now is we don't know exactly what that support looks like. So we don't even know, say, what sectors to deploy in, but we've seen like consistent bullishness in things like Coinbase and Tesla that's been in like our Trump trade, because that's things that people like, they don't know exactly how the help is coming, but they definitely expect the help to be there. And so, yeah, I think that we are absolutely, kind of in that mode where we still have like our Trump trade stocks, but we expect overall bullishness, but we want to see the meat to that where exactly the legislation is going to support things. Because a really good example is in the past, last Trump administration, real estate got some great credits in even in like, in the tax code, and then again in the bailout for the pandemic, which you wouldn't necessarily expect for the pandemic, but there was kind of some reasons for that. But that's he's shown loyalty to real estate, but I haven't necessarily heard specific policies for real estate yet. So that's something where we could see policy support really drive up the bullishness in the real estate sector, but I'm not there yet until I see the policy. That's a really like kind of concrete example of what we're talking about.
And I see Bitcoin back over 100,000 this morning. I think it's at 102 right now. We've talked about the strength and the signals we've seen for Coinbase and the crypto related stocks. But I think what I hear you talk about a lot is like, until the policy is actually in place, it seems like this is kind of speculation, even though it might be like high probability speculation. But once we finally get the Trump declaration and what he's going to actually do when he's in office, that is when the risk is taken off the board completely for these speculative, you would say, moves that we're seeing in anticipation of what may be a high probability event, but not a certainty. But once it becomes a certainty, that's when these stocks, you'll become like that much more confident in what we're seeing. Correct?
Yeah, yeah, definitely. And I was just thinking about adding a second Coinbase as we were starting, because like the way I'm looking at this latest Bitcoin move, where it's like it looks like it found a nice bottom and it might be prepared to like go on another really nice run because it found like what looks like some strong support. And net option sentiment on Coinbase is back to 100. So I'm gonna watch a little more, but that's actually what I'm thinking is my extra bull pick right now.
Mm-hmm. And Rob commented saying that QQQ and SPY net option sentiment has been super useful. Saved me a couple of times, so that's awesome to see. Happy you like that signal, Gromwell, and use it in your investing and trading.
Yeah, I mean, it's nice. The big thing that it's helpful is like when you see it moving in a different direction of the market, which is not infrequent, where you're like, oh, I think it might be about to turn. Like that's the biggest help for me.
And
but yeah, maybe if you want to say how it helped you specifically, so other people might know.
I think even if the market is in a going bullish or going bearish, and you see an inverse in the net option sentiment in Prospero, you could kind of understand if it's a buy the dip or sell the rip type of environment, and kind of move and invest off that kind of signal you're seeing, which is I think is super helpful. But yeah, glad to see it, Grumble. Okay, so the last thing I want to ask about this initial topic we've been discussing, that dynamic that we were just talking about with crypto, although maybe this won't happen with crypto because it seems highly likely, but when things trade in anticipation, if that doesn't come true, it seems like that would set up a like sell the news event. Are you worried about that happening in maybe not crypto, but anything else that's kind of run up in this Trump trade that we've seen for the last several months?
I mean, not really, because I think especially like crypto policy could have cascading effects, right? If you have like, say, a more optimistic, he names an SEC chair that's more optimistic for Bitcoin. Well, then you get that event, and then there's the event of like the policy that starts to roll out. Then you might have people taking, Bitcoin and Treasury, the U.S. There's events that kind of could cascade into each other. That's very different than some other things that are related to policy, and that's just because there's so much potential growth in cryptocurrency there that makes it kind of unique. And like a lot like the people that I talk to in finance, their main reservation always about cryptocurrency was not, and the blockchain especially, was not whether it would be there, but whether the country would actually have laws that would make it clarify. Like, for example, like ICOs, like there needs to be a lot more clarity on the legality of, utility tokens or security tokens, and making it easier for things that don't have a utility to ICO in America, for example, is a big thing. If that happens, all of a sudden, I think you have a lot of businesses ICOing that might even be traditional venture businesses that kind of go that route because they want to just like raise from the masses, have something that's like publicly traded, also a cryptocurrency. That's like a really good example of something that just gets unlocked with a friendlier administration. And that's already happening in other countries. We've seen a lot of cryptocurrency businesses happening because you don't necessarily need the same laws as they exist. There's a lot more clarity in other places. In places like Switzerland, for example, that these businesses can be run there. But that remains to be seen. But that's going to be a huge thing if there's a more ICO friendly environment here. I think we're going to see a lot more of those businesses open up here, and then a lot of businesses that would raise in other means raising in that way.
And then if there was rules set in place, it would prevent things like the Hawk Tua coin. Did you see what happened there?
Jesus. I did. And that's part of why we need regulation, right? And we talk about that, the difference there. Part of why we need regulation is there's people that are, using that murky water to take advantage of people. But if there were actually like better securities laws around it, like there are with other things, it would actually be harder for things like that to happen. Right now, there's not a lot of clarity on the laws. And even things like people speaking about coins, right? We've seen like Elon Musk move the price of Dogecoin like a number of times, right? And that specifically is highly illegal and regulated when it comes to stocks, but it's not really worked out in cryptocurrencies yet, and they haven't really gone after people that have done that. And there are, as I've said, I've heard of a lot of private like influencer groups that just pump coins together. That exists. So yeah, I think that we need to have a lot more clarity on that, like, because it will open things up, but will also make it harder for bad actors to succeed.
Do you think once those rules are set in place, then from like that date on, people will be regulated, or there'll kind of be like a backtracking of people that broke those rules prior to when they were in place, and people could be in trouble going for like that for actions that have already been done?
Yeah, I mean, I think that one is tough just because they tend not to go back and like do things if they haven't done them already. Like there's a pretty big docket. But who knows? Like that's one of the reasons that people haven't wanted to ICO, because they said the government might come after them later. So it could happen. But yeah, I know that's been why a lot of these, ICOs, these startups, these businesses have been happening in other countries.
Okay, so something I wanted to bring up today, because I see a lot of innovations going on with SpaceX and Starlink. So the first ever satellites were launched by SpaceX for Starlink that will provide phone service anywhere in the world, so calling and texting. They already have the internet that a lot of people seem to love by Starlink. I'm wondering if Starlink's success is big trouble for AT&T, Verizon, T-Mobile. We've seen the insane innovation that Musk can have on companies in different sectors. Are those old companies up for the challenge and ready to compete with Elon Musk?
Well, I think that's why you see like places like Verizon partnering with AST Space Mobile, right? And that's a big reason we like them, because that could be a way for these places to compete. But yeah, I mean, if you think about like this old cell infrastructure, right? It's expensive to maintain. It has like outages. There's so many reasons that satellites would be better, and that's the way of the future. And it just said, like, we talk about like the monopoly of AT&T and being broken up into all those companies, a few times on it, and being like the example of like non-innovation, right? And you wonder why these massive companies with huge profits have not invested in satellites themselves, right? So I do think you'll see like that's a big opportunity for something like ASTS, right? Because they're willing to like share more than Starlink. But I think that's the way of the future, right? I think unless there's some new tech that's born, this satellites are going to be the way that people do this. And so, yeah, I think that we're going to have to see what happens there. But I think other than policy, it's that could make Elon Musk like benefit. But like when we talk about like full self-driving, I think that's a big difference, because like the Trump administration could use an excuse. They could just be like, oh, well, we've evaluated it and we just think Teslas are safer on the road than these other self-driving vehicles, right? But if you're talking about like cell phone reception in the sky, right, that would be pretty hard for them to say, oh, like Starlink should have the monopoly when there's other companies capable of like, it's not a safety issue of like beaming, satellite, like satellite internet, satellite, cell signals down. So that's a bit harder. Like, I'm not saying that it wouldn't happen. It's just a bit of a weirder sell. So, I mean, I think that's just going to be the question of like, who can get a viable product to people. But I do think that there is a distribution advantage, right? If you already have Verizon service, like Starlink, Elon Musk is going to have to figure out a way to win you over. And maybe they could do it on pricing. You can never rule that out. They could just undercut Verizon, and then, a lot of people would switch. But there's a lot there. I think there's a lot tougher of a road for Elon Musk, Starlink to win in cell phones than there is to win in self-driving cars.
So I personally had a pretty bearish mental construction of like AT&T, Verizon, T-Mobile. But you said something that just unlocked like a thought for me that I'd never had before, where could those companies be a safer way to play like ASTS, Rocket Lab, if they're going to partnership and benefit off those companies growing? Or is there too much baggage in those companies that you'd rather just hold like even if they're riskier, more high upside, like ASTS, Rocket Lab, Space Mobile, all of those high growth companies?
I mean, I think that's a good question because I can highlight a difference for you, right? It's not a great way to play those companies unless you also like the company, right? There's definitely some good probability that if ASTS works, that an exit is to Verizon, right? But when we talk about the same thing with like quantum computing at Google, we'll say like, even if their tech isn't the winner and they can put more money behind it than a lot of other people. So, it does make sense that them or Amazon or someone would be the winner than these companies that, might do very well and grow a lot, but are kind of a more obvious acquisition. But the big thing there is like, I also like what Google is doing in other places, and like Google's management, I have more faith in than Verizon's management, right? So there's that component. It's not a great bet, I think, unless, hey, if you like Verizon's management, yeah, it's not a bad bet to say like, hey, they're going to do well. They're going to acquire a satellite like a satellite telephone company like ASTS, and they're going to, grow long term. But some of that is like having faith in the management, right? And I'm picking on Verizon a little bit, but I actually like Verizon more than, AT&T by a long shot, right? So that's something where like, if you have to play that, that's not a bad thing to do, but it always comes down to if you have faith in the management, right? That's what it always comes down to. And I don't really have faith in Verizon or Verizon or AT&T's management, less so. That's why it's a little different. Like, I'd sooner invest in IonQ than I would invest. I'd sooner invest in ASTS long term than I would in IonQ versus Google. Like ASTS versus Verizon versus like IonQ and Google. I've owned both IonQ and Google in both the high conviction portfolio, the trading portfolio more times. And I've owned ASTS many times, but I've never owned Verizon. I've never owned AT&T because I just don't think they're very good companies. And the signals reflect that. You never really see good, even long-term bets in those companies because I don't think the market has a lot of faith in those companies long-term. Even though they're very entrenched and they have, big user bases, all that stuff, the market still doesn't seem to have faith in those companies. And I think it's for the reasons that were outlined.
And maybe the next company we'll talk about is kind of a similar story. So I wanted to bring up Lucid because I saw that they had increased in a lot of their business lines. And we talked about how Tesla reported shrinking deliveries, I believe, for the first time ever year over year. Lucid was able to increase their deliveries by 71%. And they also had uptick of 7% in production. So does that number we got for Tesla kind of open the door for these EV companies that their stocks have not been able to work, like Lucid and Rivian, in 2025? And are their businesses finally catching up with the momentum? Because there was a lot of hype behind these companies when they first went public, but maybe the business was lagging, but now it's finally there. What do you think about it?
Yeah, I mean, it's not a zero-sum game, right? Just because Tesla's struggling doesn't mean another small up-and-coming EV manufacturer is what's going to get it, right? There's a lot of like, irrespective of the fact that like, it's not even necessarily just traditional, right? People still buy traditional cars. Just because people aren't buying Teslas doesn't mean they're going to buy other EVs or that production. But then there's also like a lot of manufacturers now have EVs, right? So I know BMW is doing some interesting things in EVs. Obviously, you have like Toyota doing interesting things. So it doesn't necessarily mean because Tesla isn't doing well that it's going to go to these upstarts. And I think the upstarts overall have underperformed, right? They've disappointed the market relative to like what the growth is going to be. And I always think that like for me, for high growth companies, I don't really like to see setbacks, right? If I am investing in a company early in their growth cycle, I don't necessarily have to see, astronomical growth, but I don't really like to see them disappoint, right? If they're underperforming relative to expectations, to me, that makes me doubt the management team a little bit because they can't assess their own growth capabilities well, and they can't deploy their dollars in an efficient manner as possible, right? A lot of the best growth stories of our time, we don't necessarily see, like if you think of like Nvidia, right? Before they saw mega growth, right? There was a long time where they were a good growth company and before they really like achieved and they were kind of like a company that a lot of people liked, but they didn't see growth this crazy, right? Until the AI boom. But at the same time, there weren't a lot of disappointments on the way for NVIDIA in the same way we've seen for like Lucid, Rivian, and we've seen, I think the other one that I'm not remembering, I think it was Fisker that just died, right? There's been a lot of letdowns in EVs overall, and I just think that gives me pause overall.
And so there's been a lot of things happening in this autonomous driving and EV industries the past year. Uber was a stock that wasn't able to perform well in 2024. They're off to a better start in 2025, up 6% already. I think the big fear for Uber has been what Tesla is planning to do once their autonomous is rolled out. Maybe if you're an Uber shareholder, by the news we got today, you might feel more confident because Uber is increasing their share buyback by 1.5 billion in the first 9 months of 2025. So this should be a sign that the business leaders of Uber are confident in their business and think their shares are undervalued. So do you think that is a telltale sign that Uber, is undervalued, or is this just trying the management of the company trying to like set a narrative that way?
I mean, first of all, I think that when companies buy back shares, it really kind of depends on their maturity cycle, right? What happens? I think or even something like paying dividends. I think you have to keep in mind that a company, it really depends on what a company can do with its cash, right? And the message that it sends. And like, for example, everybody loved when Meta declared a dividend. And I think a big reason for that was that Meta didn't always do well with its cash, right? It made some bad R&D choices. So when you're seeing them mature and say like, okay, just because we have a bunch of cash lying around, we're not just going to throw it places. We don't mind paying a dividend. That kind of thing shows maturity and share buybacks that you're evolving. But like when you look at a company like Uber, right, that still really needs to expand, right? It doesn't have the same profit base of a Meta. It doesn't have the same user base of these places. It has some threats, right? A company like that, I would actually rather see them spend money to expand, move into new markets, secure new user bases, then I would see them buying back shares. So you have to take it a step at a time. But I agree, like sometimes creating a narrative is good. Sometimes the best thing you can do for your company is drive up the stock price, right? Because you can drive up the stock price. If you don't have good things to invest in today, it can be smart if you can move the stock price, then issue more shares after the stock price is higher. But, you have to be able to match that with showing the right kind of profits and showing the right kind of growth. And I just kind of want to see, where I think the buyback seems to be doing well for them today. But I kind of want to see what their projected EPS is. I think I can see it down here. Okay. I almost like it pretty well. Earnings per share. Let me see if I can see. I mean, they actually had a pretty good quarter this quarter. They had, they earned 80 cents a share. So yeah, I guess in light of that, it can be smart. If you expect your EPS to keep increasing, right, and you buy it back, it's not bad to bet on yourself. But I think if you're looking at just where they are, if you look at something like raw earnings, I kind of want to see. Yeah, and if you look at them, they're still at a 32.82 PE ratio. That's not great. But I just think their core business needs to be a little better. That's what I'm looking for. I'd like to see them expanding more. Yeah, if you look at their their revenue, like the trailing 12 months versus last year, 42 billion on the trailing 12 months. Last year is, I believe, 37. That's, you'd like to see them grow more than that. If you look at 2022, it's 31. If you look at 31 to 37, if you look at 12/31 to 21 to 12/31/22, that's 17 to 31. So their growth has really, really slowed down, and they're just really not profitable enough for me to be okay with that as an investment. So overall, I don't think it's a bad strategy, but I think it's a strategy reflecting that they don't necessarily know where to put their money to grow, and that scares me a little bit.
So maybe as a standalone company, not interesting, but if they were to team up with one of the big dogs, maybe more so. And there was a story about how Amazon is interested in acquiring Lyft, the Uber competitor. Lyft has 24 million active riders, and Amazon is working on an autonomous vehicle rollout called Zoox, Zoox. Do you think this is an interesting acquisition for Amazon, kind of really entering an industry that I'm not sure they're really a player in as of right now, but would be heavily if they were to acquire Lyft?
Yeah, and that would be a definite scary thing for Uber stock if Amazon acquired Lyft. But I mean, it would be interesting for Uber to team. I mean, I'm not sure who would acquire Uber. They might be too big for that. I mean, I don't know. Like, I don't really know what
Apple?
partnering would do for them. Yeah, maybe. But I don't really know what partnering would do for them. I definitely think that that is a scary news story. If Amazon acquired Lyft, I think Uber would suffer immediately. But yeah, I think the full self-driving is and Tesla is a big existential threat to them. And even if it's not Tesla, if Uber's not going to figure out self-driving, and I don't know if they've given up on it. I know that was something they were investing in. I don't necessarily think that's something they're investing in anymore. That's just an existential threat to their business. And would make me concerned as a long-term shareholder, because I don't think the upside is there to justify what could happen, especially with Trump being president and the relation to Elon Musk and what that could do with full self-driving.
Well, so if you have Google and Waymo, you'd have Amazon and Lyft. Tesla is them and themselves. It seems like only Apple, Meta, and Microsoft would really be the players, unless Tesla wanted to kind of just get all of those users to instantly have that business when they're ready to roll it out. But I don't know if they're quite big enough. Like the other ones are kind of triple the size almost, besides Meta. So what is the likelihood you think Uber isn't a standalone company and is acquired? Do you think there's any shot at that in the next couple of years, 2-3 years?
I mean, I think I could see them. I could see them getting hurt by Tesla, and at their valuation now, I don't see it. But I could basically see their valuation getting hurt by full self driving. I could see their valuation getting hurt. I could see their valuation getting hurt uh, by the Lyft acquisition, Amazon, or just Amazon. I think wants to get in that anyway, whether Lyft helps them or not. I think they want to be in autonomous. Then I could see someone kind of like vulturing in that also has AI technology. I mean, I could honestly see Microsoft doing it, and Microsoft like trying to get like compete with Amazon in the delivery game using their AI tech, or Google with their self-driving, just kind of acquiring that infrastructure that they have, that user base, and replacing it with self-driving. Like I could see either of them, but I think at the valuation they are now, and I just looked at it, like their market cap is 140 billion. I just don't see anyone wanting to acquire them at that price. Their value would have to go down. I think at least under 100 billion. But that is a big check, right? I think it would almost definitely have to be less than 50 billion, and maybe they get undercut on a bad offer. That's just like too big. I'm interested in checking Lyft's market cap now. Yeah, see, Lyft's market cap is 6, right? And that makes sense as an acquisition target. But that's what I'm saying. Like Uber is just like way too high to be an acquisition target right now for what they have. Especially all they really have is that user base and acquiring that infrastructure to roll out something like self-driving, deliveries, taxis, whatever. But like that infrastructure is not worth 140 billion. And what's always like kind of interesting exercise to do, where you're just like, okay, like how much would it cost to build similar infrastructure, right? And let's say Google wants to roll out self-driving, right? And they were just like, okay, we don't want to pay 140 billion for Amazon, but for Uber, but what we would do is like we would subsidize, like give people 50% off their deliveries, rides, whatever, until we reach 20 or 30 billion, right? You could be like, okay, I could see them building a user base that way. And sometimes it's like helpful to do that exercise. Like, yeah, 140 billion is a lot to spend, especially if you're like, okay, we could build up maybe even a bigger, we could build up our own customer base, our own brand that's not attached to some of Uber's old things, by just, subsidizing people's stuff.
Yeah, and someone who we didn't mention who would have the cash to write the check instantly is Warren Buffett to make that deal. I was surprised to see that, I thought our consecutive streak of beating the S&P 500 was impressive. Buffett has done it for 9 years in a row now. And I was honestly surprised that he was able to do it last year, because it seemed like he was taking a pretty contrarian approach of being very defensive, very defensive, selling a lot of positions, building his cash pile. The fact that he was still able to beat the market, I think, is a testament to his, being the king of Wall Street and his legacy. When there's no stop in sight, I guess, for Buffett, even at his old age.
Yeah, I mean, I think what's interesting, about that is it's very like that consistency is very hard to do, and it's also what we talk about too all the time, that like being defensive is the best thing you can learn as an investor, right? You will do better missing out on opportunities that are big if you're just playing defense and you're looking for safer wins, right? It's the old you'll hit more home runs if you're trying to hit singles and just make solid contact, right? And I think that not enough people have that mindset, and too many people get obsessed with there was a question that was a perfect example where in our Gen AI training, we're actually working on making those answers. If you had a question, we're still getting to it. But we got a question where it's like, how do I find the next 1,000% winner, right? And it's just like, well, you don't look for that, right? That's how you get into trouble. If you're just like, if you're not happy with 50, 100% wins, that doesn't do it for you. You need that like 1,000% win. That's how you're going to end up finding more 100% losses than you'd like, right? And I think Buffett's kind of the master of that. And you could see like he just doesn't mind. And you know what? If you probably asked him, like if he had an expectation that the market would be up over the next year, gun to his head, he'd probably say yes, even though he's going like to cash. But this is what we're talking about. He has a process, he has principles, and the valuations just aren't where he'd like them to be to deploy capital. And that just means there's more risk, right? And he's kind of a master of like avoiding risk. We try to do our best to avoid risk. We have some helpful tools that we leverage, like net option sentiment on QQQ and SPY, that says, you know what, even if we're worried about volatility, we're worried that there could be scenarios where the market's down a lot, and we think the market's a little overvalued, we're comfortable in saying, okay, we're fine to stay with some of our like aggressive tech picks, even if we're net long short pretty even, as long as we're just willing to get out if we see more risk, if we see net option sentiment going down as we have. You know, not everybody has that methodology where they could say like, okay, we're going to see the warning signs and we don't mind like pulling the trigger to get out, so it can allow us to take on a little more risk. That's, I think, what makes the Prospero signals really unique. But at the same time, you are not going to be a great investor until you're willing to play a lot of defense. And I think where I see people get it wrong in every bull market is what people don't realize is they can be up 200, 300% in their portfolio. And that doesn't matter if you don't know how to take your gains in the bear market. I've seen so many people like get 3-4 years of huge gains and then they just lose it all in 3-4 months because they only know how to play the bull market. And I can't stress that enough. It doesn't matter how much you're up, how smart you think you are. If you don't have the right tools to know when you should get out, you're probably going to lose it all. And I've seen that happen time and time again with people that just think they completely understand the market. They're the best investors, all this stuff, but they just don't understand that the market is very kind to you in bull markets. And if you don't know when to get out and you just assume that you're smart and you're just going to be able to keep picking winners, you're going to lose it all.
I think that's a great point, and it leads us well into the next thing I wanted to bring up, because we got a question from Jason Marlowe. We get a lot of troll comments on our SoundHound videos, but this one was real. He said he bought SoundHound for under $2 over a year ago. Recently, he sold twice his initial investment, but he still has that leftover stock. He's asking, what should he do with the rest? Hold it, sell half to invest elsewhere, or hold all of the rest? How would you manage that position?
So what we always say in this type of thing, that our general advice is, we say, if you have a 50% gain, get rid of 50% of your win, right? And then if that goes up to 100% gain, get rid of 50% of what's left, 25% of what's original, and just, ride the rest of it. That is our general advice. That being said, things like trailing stop losses are great, where you can just say, like, as your profit goes up, you can say, okay, it's at 50. I'm going to get out of all of it at 30, or 75% of it at 30. There's lots of different ways. I can't stress enough that you really have to figure out what your investment goals are, what your risk tolerance is, things like that. Like, I don't set stop losses, for example, because I'm comfortable watching the market, right? I don't want to be stopped out of something. I'd rather have the discipline to say, like, okay, I'm going to watch the market. I'm going to know based on all the signals, things like option sentiment, right? Because I don't want to be stopped out of something, right? If QQQ and SPY and option sentiment are still high and I expect it to turn around, right? That's the last thing I want. So it's very important to have your own style and everything. But I have to say, when something has had like a meteoric rise, like SoundHound, like, there's going to be a correction at some point. And that's the same thing that we said when it was trading at $10, because it was a meteoric rise. It got a little ahead of its revenues, a little ahead of its earnings in terms of these massive valuations. And we were confident. That's why it's so funny that everybody says, like, comes to that video to say that we're wrong, because, like, we were right. $10 was not a good price for 9 months longer, right? And it's the same thing now. I don't think where it's trading is a sustainable price. And I do think you'll have a chance if you trade out. It might not be at the peak, but I do think you'll have a chance to get back in below where it's trading now. Maybe, maybe not. But it really can't hurt to just hedge and sell 50% of your position. And like you could always say, like, for example, right? Let's say the PE ratio catches up later and I'm wrong and it doesn't go lower than it is now. You can always say like, okay, earnings actually caught up. I'm going to get back in. I'm going to buy it because I actually think the fundamentals caught up to where it was and it's trading a little higher and you can get back in, right? There's no shame in that. Like, but when stocks go up that fast, like it stands to reason that you'll get a chance. Like even look at what happened with Bitcoin, right? It was just up, right? And then it had a little correction and people had a chance. And I think it's going to start going up again. Like even something that has, what's likely presidential support, that solid of momentum, it's going to lose momentum. And when something goes up that fast, it's going to go down really fast too when that momentum ride ends. And it can just never hurt to take profits, even if you're wrong. Like I would say 7, 8, 9 times out of 10, right? You're going to be happy that you sold on that momentum upswing. You might not get the peak, but you very likely will get a chance to buy it back at a better price. But that all being said, if you have faith in a company long-term and you're just like, I just think it's definitely going to go higher than this. I have a portfolio of like 30 stocks. This is one of them. It's one of my riskier ones. I just want to hold. There's nothing wrong in that either. It can have tax benefits, obviously, to not take like a short-term capital gains. But that's what I mean, where it really depends on your investment goals. It depends on your strategy, and you have to do what's comfortable to you. That's my strategy because I like to lock in gains. And I'll say it one more time. Like if something goes up 50%, I'm taking 50% out. If it goes up 100%, I'm taking, another 50% of the current 25% of the original, just to like really lock in gains. And like what I always say about the meme stocks is when I look at those runs, when I look at especially AMC that really have had that this like catastrophic thing the other way, like what I always say is like, there are so many people that had a 10x return. So 1,000% return on that. People that bought in at 5 saw it go above 50. Like those people in that trade, the thing that I say about them is like they hate hedge funds, but I saw people in that trade greedier than any hedge fund person I've ever seen because they're happy. They're getting the hell out of most of their position if they see 1,000% gain. They're not saying like, oh, AMC 1,000, AMC 1 million. Like everybody there was saying it. They're saying like, holy shit, I got a 1,000% gain. Like, and I think that that's the mindset that retail investors have to have more to be happy when you have these ridiculous gains, not necessarily think that just because you had a 10x gain, there's a 30x gain coming. That's probably the biggest mistake that you can make.
And our chat loved that discussion from Mario and Taco Dreams commenting. He was hooked on Prospero in December of 2024, and he's looking forward to using it in 2025. So glad to hear. We got another question. Any thoughts on NVIDIA where it is now from Mario?
Let's see.
I think they were making one of the more bullish moves recently, right?
Yeah, no, I've seen it high in net social, high in net options. I actually thought about getting into NVIDIA on Friday, and it's looking good. But my biggest problem with NVIDIA is just that, like, that upside. It's at 57. It continues to not be like where I'd want it to be. We have things like AppLovin that just like profile similarly, are smaller market cap, and have higher upside, right? It just makes me nervous that there isn't that same faith in the long-term options markets in NVIDIA. I could, it's on my list of stocks that I would like, but again, I'm looking at it this week and I'm saying, you know what? I think I'd rather have AppLovin than NVIDIA. And I might be wrong about where that is. But it's just hard not to think that with AppLovin having so much of a higher upside. But it's on my ad list. I have been actually strongly considering adding it. On Friday, I'm looking at it again today. I might end up pulling the trigger on it, but that upside just makes me nervous.
Jonathan commented TSM is in the top 10 in upside.
Interesting.
So maybe one to watch. But you had a fairly negative view of chips overall with the macro setup. That kind of affects the way you
Yeah,
into,
16 at option set to. I mean, I just I worry about everything going on, like, with China, TSM, Nvidia. Like when Trump takes office, like I've said so many times, China could do a lot of things, and a lot of them are worrisome for the chips industry, which is why I've stayed away a little bit. And that's the point I always make. It doesn't mean that I don't think that NVIDIA having a great year is likely. TSM having a great year is likely. I just think the risk reward is better on, say, AppLovin, Coinbase, things like that.
To spin on to our next story, a small stock was making a huge move today. That stock is Fubo. There was an announcement made that Disney will combine Hulu Live TV and Fubo into one company. Fubo is remaining public, but Disney is now going to hold a 70% stake. And prior to this deal happening, Fubo had created a lawsuit against Disney with their proposal to launch a live sports streaming service called Venue with Fox and Warner Bros. But as a result of this deal, that will now be allowed to go through. So it looks like a win-win from Disney and Fubo. Fubo obviously making a huge move. Would you be interested in Fubo after making a 180% move? I feel like that's kind of not too volatile maybe to get into now.
Yeah, and I mean, I can look. The problem with things like that is like the people that win on those trades are people that have gotten in before the news. It's going crazy on the news. It's a bit of a meme stock, and even like with this thing, its net option sentiment is only 57. So it's probably people saying we missed out on this event, right? It's a 28 profitability, 59 growth. There's really nothing like the downside definitely went way down. That's interesting. The bets against it in the long-term options markets went down significantly. It was on Friday, it was 63 downside. Today it's 42, right? So that's the big difference. But that's it, right? That's the big change. That option sentiment looks pretty similar. The big change is that there's less people betting on it in the long-term markets, but it doesn't profile as a very exciting stock. And like that 28 profitability is like probably the biggest problem I have with it, although I have other problems.
And I thought it was an interesting story because I think just a few weeks ago we talked about how there'd probably be some kind of consolidation in that industry. How about Disney? Now that they'll be allowed to have this joint venture with Warner Bros. And Fox, are they more interesting to you?
I mean, I think Disney. I want to see where they are on profitability. There's 63, 47 growth. Like, it's just like my thing is there's just like better businesses. Like I don't even know, but like I'd rather own, Netflix is, 89 profitability, for example. I'd rather own a company like Netflix that has that profitability profile than a company like Disney that I don't know where Netflix level profitability is coming from them. And I think the core reason of why I'm hesitant in companies like Disney is like, I like efficient businesses and businesses that have like a lot of legacy technology, right? Like Disney or legacy businesses like theme parks or whatever, even though those do well, like I like lean, newer businesses that are more profitable just overall, right? And like overall, I don't really love streaming, right? And streaming or that kind of media, I think there's a lot to figure out in media, but that's what I'm saying. If I'm going to bet on someone in that kind of media, streaming media, I would bet on Netflix every day over Disney just because they have a leaner, more modern, more efficient business.
And so with stocks like Fubo, with the move it made today, seemingly being a diamond in the rough in the market, if you had found it before, it always makes me think about what else is out there. So we have one more topic that I'm going to bring up today, the forgotten sector that I want to highlight. But before we do that, we've had a lot of people, almost 1,500 in the stream today. Thank you all for tuning in. If you enjoyed the topics so far, please like it up on YouTube and Twitter. We're happy you're here. But that sector that I want to bring up is, drumroll, cannabis. Because I feel like there was so much hype behind this industry like a few years ago, especially honestly when Biden took office, because I think the Democrats were more pro cannabis at that point. But it seems like it didn't help. None of these stocks are doing well. From what I gather, my data points of all the people around me and everything, and if you go out in public in a city, it seems like people are enjoying the product. Do you foresee a future where these stocks, there can be some diamonds in the rough? Is this sector ever going to come back? Or what's the state of that going forward?
Well, I think it's the perfect example of like when we talk about quantum computing, right? Where we're just like, I think it was like, oh, or I think it was nuclear, which is like there was a contract that's not there till like 2034 or something, right? Like sometimes an industry maturing is hurtful to it, right? Because when everybody was like, oh, weed's going to be illegal, like it's going to be a huge business, that's when the stocks were going crazy, right? But when these businesses actually rolled out, right? And the earnings didn't match the speculation, that's very harmful for an industry. So like, yeah, sometimes for something like quantum computing, the best thing that can happen for it is exciting news, speculation on a massive business later than the business coming to fruition. Because sometimes when it comes to fruition, it doesn't match up. And that's what I think. I think we could see over speculation on these quantum stocks for the next 5-10 years before the businesses are there. But maybe when they get there, like, again, the revenues aren't quite there. The revenues aren't there for all of them, right? Sometimes the best thing that can happen for these things are speculation, especially in this day and age of retail, right? I was also at like retail, like Fervor and that helping institutions. I was looking at Qubit versus IonQ, right? And Qubit is trading at 2,000 times sales. And IonQ is actually only trading at 232 times sales. And I was just like, because someone was asking me like if Qubit was a meme stock, right? And I was just like, well, actually, when you go to the numbers, it does look like it's a meme stock, especially compared to IonQ. And actually looking at those numbers, I was actually just like, actually, IonQ doesn't look that expensive when you see a stock like Qubit being speculated. Of course, it has almost no revenue now, Qubit. And obviously, like the contract that it got is a big part of why people are speculating on it. But the point remains, right, that I do think retail investors getting involved in these companies, getting excited by them, is sending them to, like, I think even higher valuations than we saw like 10 years ago on these like frontier sectors, industries, whatever. But I do think that was always the biggest thing that cannabis had going for it, that it was speculated, and then the real, like, and I think the thing to realize is like profitability is so huge, right? The revenues can drive early things, they can drive speculation, but ultimately some companies, when you get into it, when you build in distributions, when you build in capital costs, when you build in, transportation, like a distribution or transportation, right? Sometimes the businesses, even if they grow to the size of the sales that a lot of people are projecting, the profitability just isn't there in the end. And I think that that's the big thing, the difference between like speculation versus like as a business matures, as it gets distribution, as it gets sales growth, sometimes it's just not there in terms of the profitability. And I think that that's why sometimes these frontier businesses, industries, companies, that's why they could do so well, because they don't have to answer to profitability, and they can only say like, oh, we're going to get this big sales growth. But when it actually comes to like pay the piper on profitability, they're not there. And I think, again, that's a big difference with like a company like NVIDIA, right? Where, people didn't necessarily how big and fast this, yeah, that could be an interesting trade. Someone said, here, I can put it up. I was like, I think this could be an interesting trade, but if there's more contracts that Qubit is winning, that could continue to drive it up. But you're probably right. That's not a bad pair trade. But yeah, I think that that's a big thing for everyone to always remember, which is that speculation on these things can be very good until the business is actually until they actually mature. Oh yeah, but what I was saying about Nvidia is like their profitability is like insane for as fast as they've grown, and that's just because they continue. It's very hard to predict for a company to maintain like the compute advantage in terms of how high performance these things are relative to the other chips and the markup that they continue to do. Typically, when businesses mature, other businesses catch up. They build comparable products, etc. Like I think that's one of the things that we are seeing with Tesla. But and even something like Amazon. You look at what's happening with like the Chinese ripoffs of Amazon that are like cutting into its profitability a little bit. Like I would actually have bet on say like Amazon to have better mature profitability than a company like Meta that's focused on almost exclusively on ads. But that's not how it played out. And a big reason for that is like Amazon in the end, I think, has seen more competition and then Meta has. Like TikTok is doing well, but that hasn't, in terms of the profitability of Meta. Meta is still up, I believe, in the 80s, and Amazon is in the 50s. So that's always a big thing. It's always going to be profitability in the end.
And with that being said, I think it is time to turn over to the model portfolio update, and we'll catch up with you in the Prospero lab. The markets have been sideways throughout the stream, so everybody stick around and see how he decides to make some moves in the model portfolio. The QQQ is still leading on the day, though, in performance, being up 1.6%. But the Russell has now made a move. It's approaching the SPY, which is up 1.25%, and it has surpassed the Dow Jones, which is the laggard on the day, being up only 0.8%. So happy you enjoyed the discussion today, Mario. Thought it was a good stream, a lot of interesting topics. I think there's so much opportunity in 2025. Hopefully you guys, if you enjoyed the stream today, stick around and watch us discuss everything that's developing in the markets over the coming year. So much happening in the world. But what I want to do now, if you're a newer viewer to the stream and haven't seen me do it before, is I'm going to pull up the QQQ and the SPY net option sentiment in Prospero, kind of highlight that before we do our model portfolio update. Well, George will make some live moves, and you'll actually get to see, which I believe is you can only see it if you pay for our newsletters, but on the stream you get a little free sneak peek, so you'll probably want to stick around. Okay, I'm going to check out the QQQ net option sentiment right now, which is at 41, which is well above its lowest level of 8, which was December 31st. And it's beginning to really start to look like an uptrend here. So maybe we are headed for a more bullish turn in the market, maybe new all-time highs on the doorstep. Wow. And I have the SPY pulled up now too, and it's at 40, which is well off the lowest levels of 6. I believe we saw it flash towards 0, but on the net option sentiment trend, the lowest level is 6 from December 30th, now up at 40, and it's a similar trend over the time series graph as the QQQ. So things are starting to look a little bit better. George, I just pulled up the net option sentiment for QQQ and SPY, and QQQ was at 41 and SPY was at 40.
Wow.
So things are starting to look a little brighter, huh?
Yeah, that's especially interesting for SPY.
Yeah, and when you look at the time series now graph for both, they're really starting to trend upwards, especially recently. So maybe it's a more convincing move.
Yep, just we're in a bit of a correction, it looks like. All right, let's see.
Jonathan asked about your opinion on ACHR, Archer Innovation.
Oh, I've been considering adding it. I've been impressed with what they're doing. They got like a lot of retail momentum, but it's just like the upside isn't enough. Like, but I think if I saw like a better net option sentiment trend, I could get behind it. Um, but yeah, that's where I'm at. Okay, I gotta start sharing.
I'm going to start watching it, Jonathan, because it does have interesting signals in Prospero. So we'll keep our eyes on it.
All right, let's see where we're at. This is looking very big. Okay, what'd you say? You said 44, 41?
41 for QQQ and 40 for SPY.
Oops. Gotta do 25.
It seems the crux of the market right now is how people are feeling about large cap growth. It's interesting to see over the last month that every other category is pretty far in the red, other than that large cap growth. It's good to see our high level strategy validated where we think. One-month technology echoes large cap growth as we've seen. Again, the best performing sector by a pretty good margin. This means we will lean into this trend and prioritize tech and to a lesser extent communications.
I don't know if anybody that's a Trading Winner subscriber has any thoughts. I've been thinking about starting the model portfolio, like turning it over for the year, but I kind of like putting all the history in one place too and just having a running total. I wonder if anyone has any comments on that.
Comment from Spiky Dude, what's net option NOS? I don't know if you're asking what that abbreviation is. It's net option sentiment or what the levels are today. QQQ was 41 and SPY was 40.
Yep, definitely bullish. What is MBLY? I don't remember adding that.
Mobile Eye.
32 versus 38. All right, we tilted a little bit on Friday. I'm glad. Oh, we still have Bumble open. We should have closed that when we closed the other thing. Stupid. Okay. Let's get ourselves some metrics. We really want momentum score to be repaired. Oh, damn it. That was an accident. Okay. I do want to get. Sorry, I'm adding. Thanks. Okay, let's see. Now, what? See, this is why we did this. I want to get rid of some of these repeats. Actually, I think I want to. Do we have a Wix position open? And then tell me like Baba and PDD. Actually, I think we have an Alibaba.
Wix, we do not.
Okay.
Baba, we do.
Okay.
PDD, we do not.
Let's see if we have this. Yeah, that works nicely. Okay. Great. Okay. So I'm actually going to do something different today. I want to see what we're dropping before I decide what we're keeping. Okay, I think I feel pretty good about this. Actually, I want to look at a few of these drops. Nope, I think I had the right instinct. Well, I already have 2 Microsofts. I don't think I need a third Microsoft. All right. I think I'm good here. Okay. All right. Got a lot done today.
Yeah, we got one question I wanted to wait till you were finished to answer from Spiky Dude, asking about a quant camp, just a random thought where he could better analyze, become a better analyst for his personal portfolio and using well-respected metrics.
Yeah, that's interesting. I mean, I think what it becomes tough is like my philosophy is not around like well-respected metrics. My philosophy is more around people developing their own process, and that's really unique person to person, right? Like I think you can view Prospero as like we're putting out like what we think is the best, most respected metrics, right? So I think what we are going to do if you want to come back on Wednesday is we're going to do another like full review of the 10 signals and how to use them, and that might be something closer. But the tough thing is like that's just what I'd advise. I'd advise someone to use I'd advise someone to use like the those. That's our recommendation, to use those 10, supplement it with some, I wouldn't say quant, I would say qualitative stuff about the businesses. That'd be my best recommendation. But yeah, I think we can think about, I think what I can do is like do on this, especially do a deeper dive one day on like what I do to like verify new names, tickers I'm not familiar with. I check some things like Barron's, but I'll be thoughtful about how I verify those things and take you through that process.
That's a great idea. We'll definitely do that in the future. And Spiky Dude said he'll be back Wednesday, so yes. And a great live stream from D Curtin. So that is it for today. See you all Wednesday. Happy investing. We got a snowy day for me and George right now.
Yeah. All right. See
Bye,
ya.
everyone.
Thanks for coming, everyone.